We're live. Good afternoon or good evening. This is Maldina Dervishovic, Century 21 Dream Homes. And you know what? I wanted to introduce the beautiful family I have here at the office today. Homebridge Loans came over and brought some pizzas. So we are having a lot of fun. And Mina, can you come zoom around and see the office? Say hi, everyone. All right, introduce yourself. Say your name.
Hi, my name is Milana. I'm a mortgage broker, attending here to hear some interesting from Maldina to learn something new.
And then Miloš Box is with me, so he came over.
Hello. I'm also studying cybersecurity, but I'm always interested in other fields, so it will be a pleasure to listen to today's topic.
Another Miloš, he's a marketing guy.
I'm just here for the pizza.
And the drinks. And I do have my realtors, Steven and Jackie. Go ahead.
Hi, Jackie Flores, Century 21. I am here to help you get into your next home.
Here we go.
Hi, I'm Steven Ingram.
All right, so we got this, but the main panel is right here to my left. And I'm going to introduce one by one Carmen Cervantes. Go ahead and say your name and
Hello,
you know what
Carmen
you do.
Cervantes. I'm the team lead for the Alan Castro team. I support Carlos, Alan, and Sam.
All right, and then we have Samuel Correa.
Hi, my name is Samuel Correa. I'm a loan originator with Homebridge Financial.
All right, and Alan Castro.
Alan Castro, I'm a sales manager with Homebridge Financial Services. Love working with this lovely team right here.
Yes, and we have Carlo Rosado, of course, the main guy I introduced over the Facebook
Cheers,
and
everyone.
internet.
I came
I
for
got
the
his blood
drinks.
first. So he's
I
ready.
came for the drinks and the conversation. So
So we're here to have a conversation, and we're here to talk about real estate, about loans, and the hard times are coming. Recession, as everybody knows, is kind of going down. The interest rates are going higher, and we need to come to creative ways how to help realtors and how to help our industry to keep up with everything. And the reason I have Carlos here is, and his team, is because you know I know Carlos from NAHREP. He's a director of NAHREP Lake, so I had to say that he's a big shot here. And he's just a really humble person to know as well at the same time. So you can never say that he does what he does. And same time, you know, he just saved one of my deals, and I wanted to show that to audience that what he did for me. I had a buyer that was denied from different banks, and you know what, Jackie, my realtor, mentioned Carlos, and you know, you came to my mind, and I worked with him before. You know, let's try him, and he come up with this great idea that he can actually finance that buyer for me, and now we are closing on this very soon. So I'm here to talk about that. I'm here to talk about how we can save these deals and how we can actually get this done. Even if they can do it, some of the mortgage brokers, that the Homebridge loans can do it. And let's say about this creative financing. What do you do about self-employed people? People who have, like this person on tax. Can I say that? What he had on the tax?
yeah, I actually brought it with me as an example. So I kind of wanted to talk about like out of the box financing options. I'm not going to bore everyone and go into too much detail about specific products, right? Because even myself, I would fall asleep reading certain guidelines, right? So the main objective here is to start thinking about out of the box financing options, or that they're available for you guys. Just so start thinking of so you can grow your database, and so that you can more importantly talk to more people and think about those that were denied before that you couldn't help, and maybe that you can now reach out to. So that's really the main objective for me to be here today. And I'm going to go over a couple quick points about the different products that we do have available for that, so you can start thinking about, like I said, out of the box financing options.
Right, so this particular buyer had what, $3,000?
Yeah, so I brought a copy of his tax returns. He was a sole proprietor, and on his tax return it showed, Nadine, do you want to read that?
All right, so I'm not gonna say the name, but the entire tax return showed $3,185 that he had income.
For the whole year.
For the whole year.
So for your traditional financing options, what can you go buy for $3,185 if you make that kind of money?
Groceries for 1 month.
A car? Not even a car. You can't even buy a car.
No.
Right? If you make $3,000 a year, you're not going to be able to buy anything.
So obviously he's self-employed. He's not showing the income. He is making the money. Like, remember, like in 2005, 6, 7, before the crash, we had this low income, self-employed income, they could just go ahead and buy. And this is, it looks like it's coming back. Is that what it is?
Yeah, so basically what I'm going to talk about it's called non-QM deals, non-qualified mortgages. So those are just basically mortgages that don't follow your conventional FHA, VA, conventional loan guidelines. So there's a little bit more wiggle room and freedom to do these types of loans. And so specifically more for those that are self-employed. How many people know people that are self-employed, right? Grocery store owners, realtors.
We are self-employed.
Realtors, right?
Yep.
So this will help solve certain situations where when you file your tax returns, 'cause what do you want to do when you file your tax returns? Typically, you want to show that you make too much money, right? So that you don't have to pay so much.
We deduct a lot of expenses.
You do,
we
right?
do have a lot of expenses, yeah.
So and it's a double-edged sword, right? So from a typical traditional financing options and guidelines is we have to go off of what your tax returns show
Right.
to qualify you. But with this unconventional mortgage programs, we can take a look at other options. Like for this specific example, what we ended up doing was looking at his bank statements, and we looked at his deposits over the past year, and we averaged that out, and we were able to use that as income as opposed to the tax returns.
I find like a truck drivers are also like self-employed. If you're a truck driver, if you're a realtor, like examples, let's say, who qualifies for this kind of loan? Who
Yeah.
is self-employed?
Anyone that's self-employed. So
Okay.
how many people do you know, like entertainers, truck drivers,
Oh, that's a good way, yeah.
people who own nail salons, right? Restaurant owners. There's a ton of different people that are
Here we
self-employed.
go. So
Right.
click, start
I
thinking.
did bring a list of the different people. Some are on there.
Oh,
But
okay.
anyways,
All right. It's a
But
lot of
yeah.
papers.
and then not only that, but we also have a program where there's, so you get 1099s, right? So who gets a 1099 here? You guys.
Yeah.
Right? So you can use that as income too. So typically when you're 1099, you're self-employed also. So that's another way we can calculate the income is by using your 1099. We take a certain percentage of that 1099 and use that as income as opposed to the tax returns where you deducted so many items from that.
Yeah, so turn around camera a little bit. You can see around the audience. Now the question is also, I wanted to ask you, now you have the self-employed program or 1099 people who are self-employed. Now, is there different interest rates for them, or what's down payment they have to do? Is there any other ratios that you're looking at?
Yeah. So there are different down payment requirements for these programs. Typically, as low as 10% down is
Okay,
needed for this
okay.
program.
Here we go.
So you don't necessarily need 20% down, right? So 10% down for this type of program, because again, it's not your traditional type of financing. Credit scores as low as 660 for these programs as well.
Oh, okay.
So you don't have to have the best credit, but you do have to have decent credit, right?
You can
Right.
have FHA loan if you don't have a good credit score, and if you don't have a certain amount of down payment, like 3% even, you
Yeah.
can do FHA.
Yeah, so that's something, yeah, that's your traditional conventional method, so like an FHA loan.
Right.
So an FHA loan only needs 3.5% down, right? To get into a loan like that, and credit
540
scores as
credit
low as,
score.
yeah, in the 500s.
Yeah, but we're talking about self-employed.
Right,
Yeah.
so,
Self-employed can qualify for
Yeah, so
FHA.
when you go FHA, you have to use your tax returns.
Right.
And so this person wasn't able to qualify
Yeah, they
FHA
wouldn't
because
qualify for that.
his
Yeah,
income
so-
showed $3,000, and FHA is gonna say, no, sorry.
No, they have guidelines for that.
Yeah.
Definitely not.
We can't do it.
So-
So this is a different, like I said, out of the box, different financing options as opposed to your traditional FHA conventional.
So if you have
VA.
10% down, if you're self-employed and you make $3,000 a year, you can still buy a house.
That's right.
Just to like nail it down, okay? And then your interest rates will be
Yeah.
let's talk about interest rates right now. I know it's a
Yep.
subject that is that kind of changes every day. But let's say the interest is there for normal person versus the person who has self-employed. What's the difference in interest rates?
Yeah, so interest rates are going to be a little bit higher than what your normal traditional conventional methods are going to charge you. So this is going to be probably like a 1.5% more typically
Okay,
is
so
what it's going to be.
that's not too bad, because honestly, I just had a situation where I had a hard loan, and the person had to do the hard loan, and the interest rate was like 10 and actually 11.5%. So that is high. So this is much better option.
Yeah. And again,
Yeah.
rates are volatile. It's a crazy market right now, so don't
Yes.
hold me to that right now. So rates are definitely, the market's a little bit crazy right now from an interest rate standpoint, but yeah, they are going to charge you a little bit higher interest rate for this type of a program, because again, we're not using traditional Fannie Mae, Freddie Mac, Ginnie Mae loans to qualify you. Those, you'll get the best interest rates if you go through that type of financing options. This is going to be different. This person wasn't able to qualify through an FHA or conventional or VA method, but we're able to qualify them.
If
through
you're a
this program.
realtor and you have a client who cannot qualify, I urge you to save this deal and save yourself a deal with calling Rosado. And actually the phone number, I wrote it down.
Oh, thank you.
847-757-7520. And you can repeat it again.
847-757-7520.
All right.
I'll drink to that.
Yeah.
I will too.
So this is what we need to do. We need to save those deals because basically a lot of people are self-employed, especially what's happening now with the economy. They're gonna be making less money. So we will need is there anything else you guys want to add to this, to this presentation, or anything you want to say, like a funny story you guys have?
Carmen's great. Carmen's dying to say something. So what we want to say is, right, so there's your bank statement program, there's your 1099 program, there's also a great program for investors. So if there's an investor out there, we don't need income documentation to qualify you for a loan. So what we need to show is that you have 20% down, and what we need to show also is that it's basically qualified through the rent schedule for that home. So if the rent that you're going to collect for that home is $1 more than the monthly payment, and you qualify from a minimum credit score standpoint, we'll pretty much approve you.
So what is the minimum credit score point for the investment?
660.
660. Okay,
Yeah.
Here we go. 660 scores.
So again, if you're an investor, income is an issue for you, you want to buy more rental properties, we can get it done as long as that property and the rent kind of works out.
So you're saying with an investor, they need at least 20% down?
Correct.
Okay.
At least 20% down for that specific program. We don't need income docs. We don't need to see your pay stubs. We don't need to see your tax returns. We don't need to see your W-2s. We don't need to see any of that.
That is actually very
So we're just going to get approved based off the rent.
So we are looking for buyers. If you have a buyers who wants to, buy a property, call us. My phone number is 773-491-9045. Call Carlos. His phone number again is 847-757-7520. And again, any questions, if you any questions to this presentation, shoot it to me directly on my messenger. I'm going to share this today Facebook as well, so you can send us a message. We can answer to you if you have any personal or anything you want to ask. Don't hesitate, please. We are open to any questions. And again, this is Century 21 Dream Homes hosting today Homebridge Loans. Thank you so much for joining us, and thank you for all the guests in our room that came to watch us and have a pizza.
Can I add one thing to that, though?
Sure,
one thing to talk about, just because I've been hearing this a lot. Can you explain about first-time home buyers? That is the big thing I've been hearing from a lot of people who are wanting to be first-time home buyers.
Yeah, first-time home buyers, we can help them too. We don't exclude them either. We do FHA loans, conventional loans very well also. We have down payment assistance programs that we can help them with as well. So we have loan programs with as little as 3% down to get into a house. Oh, as a matter of fact, if you use the down payment assistance program with as little as 1% down, you can get into a home.
And there are government grants for this, correct?
Correct.
Okay.
That's including that.
I think those are the certain areas, like with qualifying areas.
No, it doesn't matter.
Oh,
All
okay,
of
here we go.
Illinois, we can get you.
I didn't even know that.
Yep.
So it's perfect. Thank
There
you.
are-
Yeah.
There are certain income limits. There's different programs out there. So one has income limitations. You can't make too much money in order to qualify for this. There is the Cook County program as well, where you can qualify that. I don't remember if there's an income limit on that or not, but there is similar. But there's also a Chenoa program too, where there's no income limits required for that program.
Great.
So if you want free money, and call us. If you want to just spend 1% on the purchase, call us. If you have any questions, call us. Call Steven or me, or here we go, Carlos.
I'll clarify something too. There's no free money. Let me tell you. There's always a cost with
But
it.
there's a cost.
So reach out. We'll explain to you the differences between the different programs. We'll figure out what's best for you, not what's best for me. We'll figure out exactly what the different options are, and you can decide which direction you want to take it.
That was great. Awesome.
Thank you. Thank you, Carlos. Thanks everyone for
Yes,
coming.
thank you. Thank you. Thank you guys.